Okay, so we were on the topic of called up capital share and paid up capital share and the authorized capital share. So, like I think we have discussed these three concepts before in our previous class. So now we are just going to learn about some extra like other things which is also very important in company accounts, and also we are going to discuss about some calculation which may come into your business sorry in your accounting paper, um, other than statement of changes in equity, which is called SOCI by short, and the financial statement, the extract of financial statement, and the extract of income statement also. Okay, so we were talking about the face value. I just tell you that what is a face value. It is basically known as a nominal par value. It is the amount of shares which is written on the face of the shares. For example, if a ABC company maybe issue 100K shares. Okay, so maybe the face value, like the amount, the specific amount, which is you can say if a person want to purchase your share, so what is the amount of one share in order to purchase, face value. If the face value of one share is equal to $2, okay, so it means that if you issue 100K shares and the face value of one share is equal to $2, so it means that you will have 200K dollar as your share capital. Okay, so this is the amount which you will have after selling the 100K shares to the shareholders. Okay, so this is the face value. Okay, so there is also issue price, which is basically the amount of shares at which the shares are offered to the general public. So it is not always the same amount, like if you like issuing the shares into the general public. So maybe about the dividend now. What is the dividend? Dividend which you have to pay to your shareholders, which may be ordinary shareholders or preference shareholders. So basically, dividend are distribution of profit which is paid to the shareholders if the dividends are paid during the year. There is also two kinds of dividends. So the number one is interim dividend, and the second is final dividend. Okay. So if dividends are paid during the year, okay, for example, your year start is in 2015 July, and it ends in 2016 August. Okay, so you will supposed to pay your dividend in the end of the year, at the end of the year, but in maybe some cases, maybe you liable to any preference shareholders that you have to pay any remaining amount which may be previously remaining amount. If you are making any losses in 2015 and you couldn't pay the full amount to the preference shareholders, and you will have a current liability that you supposed to pay in 2015. So maybe your preference shareholders will ask you again and again to pay their remaining amount. So maybe in some cases will have to pay some you can say the amount, the dividend amount, which is your current liability in the mid of the year. So this is called interim dividend. So if you will pay, for example, 100 $1,000 in December 2015. So it means this amount which you have to pay during the year. You have not completed your financial year, but you have to pay this amount during the year. The condition which may arise, I just have told you. So you must aware that why we are paying this amount in the middle of the year. So this is called interim dividend. And the final dividend is basically the dividend which you have, like which you supposed to pay in at the end of the year. Okay. So if the dividends are paid during the year, they are called interim dividends. And if the dividends are paid at the end of the year, then they are called the final dividends. So if the dividends are declared but yet not paid, then they are known as the proposed dividends. Okay, like a company maybe propose some amount of dividend to the preference shareholders. So it if it is not paid by the company, so it means that it will not recognize paid dividend. Okay, until it is set by the examiner. This is paid interim dividend or final dividend. So you will not reduce or you will not deduct the the amount of dividend from your retained profit. Okay, in your statement of changes equity. Okay, so let's talk about, for example, if examiner would ask that just calculate the dividend per share. Like it is very obvious, like it is very easy to calculate if examiner would ask that a company issues a share which is in the number of 100 million. Okay, not dollar, 100 million. So what will be the amount of share capital? So you will have to find the face value or issue price of the shares, and you will multiply that amount to the issued shares by the company. So you will have the share capital, the total share capital. Okay. But if examiner would ask to you that find a dividend per share. Okay. So the dividend per share basically, uh, I think I should give you an example so you can easily understand. For example, if ABC company. So for example, if examiner would ask the rate of dividends. So I have an example for you. So rate of dividends are applied on the amount of shares. Okay, so it is applied on the amounts of shares. So I am just giving you an example again. For example, ABC company has again 100,000 ordinary shares. $0.5 each. Just remember that 100,000 is the amount of shares you are issuing to the general public. Okay, just remember this thing. Dollar is always, you can say that come with the amount which you can say the face value of the share. Okay, or maybe the total capital, or maybe the total capital share capital will be, you can say that rise by a company. For example, if a company is issuing 100,000 shares to the general public. So if it is its face value is $2, which I just discussed earlier in the above examples. So we just need to calculate we share capital. So what we have to do, we just multiply 100,000 to the $2. So it means that the amount which you are going to get is basically your share capital. Okay. So just remember the dollar sign will not come with this 100,000. This is the number of shares which you have issued to the general public. Okay, just remember this thing. And shares of 100,000 ordinary shares are dollar 0.5 each. It means that every $1 is equal to $0.5. It means that if I want to purchase one share of any company, so I will have to like if I will have to pay $0.5 for each share. Okay, so if I want to purchase maybe 100 shares from the company, so I will have to multiply 100 I have to multiply 100 into 0.5. Okay, so the amount which I get after multiplying both, so this amount like this amount is basically I will have to pay to the company in order to purchase 100 share from it. Okay, so just remember this thing. Okay, and it decided to pay a dividend of 10%. Okay, so here you can see that in this question, we don't know that how much dividend a company will have to pay. We just know the rate, only rate. Okay. So what we have to do is we just need to multiply the number of shares which has issued by the ABC company and multiply by this 0.5, which is the value of one share. Then we will get this amount, 50,000. So they said that it decided to pay a dividend of 10%. So we just apply this 10% rate on this amount. So this amount a company will pay us $500 to the all shareholders. Okay. So this is the amount a company will get from us, and this is the amount company will pay us. Okay. Because they are issuing this number of shares, and the value of each and every share is 0.5. So if they're successful to sell this amount of share to the general public, so it means that they will get $50,000 and they will pay $5,000 as dividend to the shareholders. Okay. So this is how we can calculate this rate of dividend. And so basically this is the two methods of finding the dividends which company has to pay. Company has to pay. Okay. So now we are going to discuss about some statements. Okay. So income statement. Just let's talk about the income statement, how to prepare income statement for the companies, or you can say that a profit and loss statement. Okay. So profit and loss statement. So it is just as the normal profit and loss statement which we are supposed to make when we are doing our sole trader related, like sole trader question, the sole trader profit and loss statement, and the partnership. So in the partnership, we supposed to make an appropriation statement. So the same thing will happen in the company's profit and loss statement. So what we have to do, sales will be the same. Okay. And cost of sales will also be the same. Which we supposed to deduct from the sales. So you know that what will come under the cost of sales. It is basically opening inventory, purchases, and minus closing inventory. So after that, we will have gross profit. Okay, so from the gross profit, we're supposed to deduct other expenses, which you can say that are operating expenses. So I will not go into depth because this is the thing which you have been working on for for years. So that is why I think we shouldn't discuss about this very deeply. We just come on to the point which is necessary. After that, there are some financial charges, and so after deducting all these expenses, we have profit. Profit before interest. So after that, we will have to deduct interest from this profit. Okay, the maybe it could be related to debentures interest. It could be debentures or it could be bank loans. You can also say that this is our appropriation account. Okay. So after that, we will get profit after interest. This is our amount, for example. So now we have to deduct some taxes from this corporation taxes. Corporation tax is basically the taxes which a company has to pay to the government in when they are like making any kind of any specific profit. So maybe you know about this, that companies tends to impose a percentage on the profit of the company. So these type of tax will, like, it is called by the name of corporation tax. So after that,